Hi, this is November 29th, Charles Nenner. Um, there's some observations I want to talk about that have been going on for the last couple of weeks. And actually, it started with a client, which of course I'm not going to mention by name, who had our highest level of service and still lost a lot of money in the gold and silver market. The situation was the following: we don't seem to be the only one that he is following. He get research from different banks and different places, and was convinced that gold for the long term is a buy, which we also think it's a buy. The only thing is, just when gold was trading below 2100, most weekly cycles stopped, and the risk reward was not worth it. With the risk reward, we mean that how much percentage can you make and how much can you lose. But he was convinced that he would be there in for the long run. And although during the last 2 months we have been stressing all the time to go out, he says, I'm in there for the long run. Now, I've been writing a couple of times about people that are there for the long run in any market, equity market, bond market, metal markets. And to my regret, what usually happens is that they're in there for the long run as long as the losses are not too huge. So what happened with this client is that he didn't want to sell when gold was just below 2100. He also had a lot of silver and a lot of gold and silver stocks. And he managed now to sell out around 1780. That is more than 300 points lower. And exactly the problem with investing came out here, that you can say when you're emotionally stable and things are going well, I'm in there for the long run. But once losses are becoming too huge, you can't handle it anymore, and you have to sell, usually at the low. Now, the good thing was he wanted to buy much more, and we got him out of buying much more. But still, it's an example of investors who have to make a decision. Do they stomach to be somewhere in the markets for the long run, or they say they're in for the long run because they have been taught that you do investments for the long run, and that's why they follow that advice. But when there's accumulation of losses, they have to take the losses. Now, the problem is they don't only take the losses, but when it's time to buy, as soon will be the case in the metals, silver and gold, they still have too many losses, and they don't have the emotional strength to go long again. Now, I want to say this because I think we're nearing a situation that could be the same in the stock markets. I think the risk reward is not so good. As I show, often the longer term cycles are topping. And I know there are people in there for the long run. And for people who are there in there for the long run, at least they should do what we do with the VIX. Put on call spread on the VIX to have some hedging on the downside. We prefer to lighten up on stocks because we don't think there's much to earn on the upside. Now, if people really are there for the long run, they should keep their positions. I just bring this gold situation example that sometimes we think we can stomach it, but then after having big losses, we sell at the low, and then when the cycle turns up again, we're not ready to go long again. One more observation about how to work with our research. So our research is based on cycles and price targets. And cycles don't always mean that it will follow, the markets will follow immediately the cycle, meaning that if a cycle tops, what it means is the chances that the market goes higher are very small. But as it happened with gold, it can hang around for weeks or for months until it turns down. Just, it's not a good idea to be long. The same thing with the price targets. Price targets are what the computer calculates that he's almost sure that the price tag is going to be reached. It's possible to get higher price targets, most of the time not. So the safest thing is to say goodbye to position once it reaches the price target, even if it doesn't give a big profit. Like on the last VIX trade, we had some emails when we said we want to go out when the VIX is at 40. But we got some emails, well, I bought my options a bit late and I don't have profit yet. and the high was 40, and today we're at 20. So one of the ideas of investing with success is you have to go in when you have to go in, take profit when the price target is reached, and don't look if you have profit or loss, because if those people would have sold at 40, which was the upside price for the VIX, they would have done much better than still holding it when it's 20 now. So far, these observations, the markets, equity markets are still on a buy signal. I would like people to see lighten up based on the cycles and watch for our sell signals and make a decision if they're there for the long run, if they're strong enough to stomach a big loss, and if they're ready to buy more once cycles bottom. I hope to come back to this important situation once the market starts showing the weakness that we expect in the future.